Most traders spend years searching for that one magic setup. They believe if they just find the perfect indicator, the perfect strategy, the perfect entry, then it's game over. Money will flow, accounts will grow, and freedom will be theirs. But that belief, it's a lie. Because if strategy alone created success, the richest traders in the world would be the ones selling their systems, not the ones following them. The truth, and it's an uncomfortable one, is this. It's not about the strategy. It never was. It's about how you think. It's about how you behave when the market punches you in the face, how you respond when your plan gets tested, how you show up when fear, greed, and doubt whisper in your ear. That's the real edge, and you'll never find it on a chart. Let's talk about two traders. Both study the same strategy. Both take the same trades. Both read the same books. But when pressure hits, Trader A starts second-guessing. She adds to losers, cuts winners, and breaks the rules. Trader B sticks to the plan. He sizes small, journals the mistake, and shows up the next day exactly the same. Same system, different psychology, different result. That's the hidden edge. It's emotional skill, not technical skill. It's the ability to stay rational when your biology screams at you to run, chase, or freeze. Think of a poker table. Every player sees the same cards, but the professional knows when to fold, even with a strong hand. Because the edge isn't in the cards. It's in the ability to detach from the outcome. The market is no different. It doesn't reward knowledge. It rewards execution under pressure. That's why Richard Dennis could take complete beginners, people who didn't even know what a chart was, and turn them into profitable traders. He taught them rules. He drilled mindset. He built discipline, because he knew systems don't matter if the trader can't follow them. Want another example? Look at Nick Leeson. He wasn't a beginner. He wasn't undereducated. He wasn't using a bad system. He blew up Barings Bank, one of the oldest banks in the world, not because of a strategy flaw, but because of psychological failure. He couldn't take a loss. He hid mistakes. He let ego drive the bus, and the cost, billions. So when you say you just need a better indicator, understand what you're really avoiding. You're avoiding the real work, the work that happens in silence, the work that doesn't look good on Instagram, the work that asks, can I stay calm when things go wrong? See, millionaire traders don't look for magic. They build habits that protect them from themselves. They journal their emotions. They review losses without flinching. They don't ask, did this trade win? They ask, did I follow my edge? Because they know one win doesn't make you a pro, and one loss doesn't make you a failure. But how do you respond to both? That's everything. That's the edge. So if you're still chasing setups, still thinking the next strategy will be the one, pause. Because of this chapter, it's not about giving you answers. It's about shifting your lens from charts to character, from tools to temperament. That's what the market rewards. And once you understand that, you're no longer just learning how to trade. You're learning how to become someone the market can't break. Let's move forward. Because now that you've seen what the real edge is, it's time to uncover how the market exposes what's inside you, not your strategy. That's next. Every time you click buy or sell, something deeper is happening. You're not just placing a trade. You're placing a mirror in front of your psychology. And that mirror? It doesn't flatter. It doesn't lie. It doesn't care what you want to see. It shows you the truth, raw and unfiltered. The market doesn't reward intelligence. It exposes emotion. That's why some traders, even the ones with incredible setups, keep bleeding capital. Not because they lack skill, but because they can't handle what the market reflects back at them. Let's make this real. Have you ever taken a trade and within seconds your heart races? You start watching every tick. You move your stop. You doubt your plan. That's not the market moving. That's you reacting. It's your fear showing up. You need to be right. Your impatience is screaming louder than your logic. And here's the thing, the market sees all of it. And it will feed it right back to you again and again until you fix it. Think of a boxer stepping into the ring. The first punch to the face doesn't just hurt physically. It reveals whether the fighter panics, freezes, or retaliates without thinking. That's the mirror effect. The ring shows who's trained and who's pretending. The market does the exact same thing. It shows your lack of discipline when you revenge trade. It shows your greed when you size up mid-streak. Shows your fear when you skip entries that match your system. No coach, no mentor, no journal entry. Can teach you faster than your own behavior under stress. Jesse Livermore once said, "The market is never wrong. Opinions often are." What he didn't say, but what he lived, is that the market reveals how right or wrong you are about yourself. Livermore made and lost fortunes because he battled the market like he battled himself. His wins were psychological victories. His losses, psychological breakdowns. He knew the truth. Every trade is a test of emotional mastery. Now let me tell you about Trader A and Trader B again. Same setup, same broker, same day. Trader A watches a breakout forming. He hesitates. He remembers his last loss. He second guesses. He misses the move entirely, and then chases too late. Trader B sees the same setup. He breathes, follows the checklist, executes, win or loss. He logs the trade and moves on. Two traders. For the market, one is exposed by fear. The other focused on process. The market didn't treat them differently. Their reflection in the mirror did. This is where most traders go wrong. They think, I just need to learn more. I need better indicators. Maybe this YouTube strategy is the one. But the problem isn't out there. It's in here, in the way they react under pressure. And the more they avoid that truth, the more the market keeps handing it back to them like a brutal coach. Fix this, or fail. Now here's the turning point. What if, instead of avoiding the mirror, you started using it? What if every emotional reaction became a signal? Not a trade signal. Training signal. Fear spike? That's your cue to journal. Hesitation. Time to revisit your rules. Overconfidence. Pull back and reduce size. See, the best traders don't eliminate emotion. They learn from it. They welcome the mirror. Because they know, once they fix the internal weaknesses, the market starts to shift. Not because the market changes, but because they've changed. And if you're thinking, I've seen this happen to me, good. That awareness is the first step. From now on, every trade becomes feedback. Not about your strategy, but what about your self-control, your patience, your consistency? Those are the real metrics that matter. So let me leave you with this. The next time you trade, watch yourself closer than you watch the chart. Because your behavior, your impulses, your reactions, that's your real P&L. And the market, it's just the scoreboard. Now that you understand how the market mirrors your psychology, let's talk about the two common ways traders respond to that reflection, and how both paths can quietly sabotage their progress. That's coming up next. They both saw the same chart, same setup, same market conditions, same entry signal. But one walked away with a profit, and the other walked away with a shattered account. This is the brutal truth of trading. Two people can have the exact same tools, yet produce completely opposite outcomes, not because of the market, but because of what they bring to it. Let's call them Trader A and Trader B. Trader A is calm. He planned this trade the night before. He knows his entry. He knows his stop. He's already accepted the risk. The second the market gives him the green light, he clicks, enters, and walks away. Trader B, same chart, same signal, but no plan. He hesitates. He wants confirmation. Then he jumps in too late. And instead of a clean entry, he gets a messy one. The market pulls back. His heart starts racing. He deletes the stop loss because it'll bounce back. Doesn't. Instead of a $30 loss, he takes a $200 hit. And now he's in revenge mode. Let's pause here. The difference between Trader A and Trader B wasn't knowledge. It wasn't some secret indicator. It was self-control. It was the ability to do what needed to be done, not what felt good in the moment. And this isn't just a story. This plays out every single day in the real world. Take the story of two students in the Turtle Traders experiment. Richard Dennis gave them both the same rules: strict entry, exit, and position sizing. But years later, only a handful stuck with the process. Why? Because when emotions entered the room, discipline exited. And this is where most traders lie to themselves. They think the key is a better strategy, more indicators, more confluence. But the truth, it's what you do after you enter the trade that decides your future. Trader A, he doesn't chase. He doesn't tweak stops mid-trade. He doesn't double down on losing positions hoping to break even. He takes the loss, logs it, moves on. Trader B, he overleverages. He enters too big because this setup looks good. He adds to losers. He lets FOMO and fear dictate his actions. One trader plays the game like a surgeon. Theater is like a drunk gambler in Vegas, and here's the irony. Trader A might only win 40% of his trades, but he cuts losses fast and lets winners run. He survives, he grows. Trader B might win 70% for a few weeks, but one bad day wipes out everything. So ask yourself, which one are you becoming? Because the chart doesn't care how smart you are. The market doesn't reward intelligence. It rewards discipline. And there's a saying every professional trader lives by. Amateurs focus on how much they can make. Pros focus on how much they can lose. That mindset shift is everything. Here's the practical takeaway. Stop trying to win every trade. Start trying to survive every month. That's what Trader A does. That's how real accounts grow. Because one day you'll take a trade that should have been a win, and the market will do something insane. If you don't have a plan, if you don't have emotional control, it'll wreck you. But if you've built the habit of discipline, you'll take the hit, and you'll come back tomorrow, intact. That's what separates winners from quitters. It's not the setup. It's not the strategy. It's the mind behind the mouse. And as we move forward, we'll explore how professionals stack these small wins over time, not by chasing perfection, but by mastering their behavior. Because what Trader A proves is that your edge isn't your strategy, it's your psychology. Everyone wants to be a millionaire trader, but no one wants to do what it actually takes. Because here's the truth, no one puts on thumbnails. Millionaire traders are boring, not flashy, not impulsive, not obsessed with calling the top or sniping reversals. They're consistent, methodical, almost robotic, and that's exactly why they win. Let me paint you a picture. Imagine two traders. Trader A lives for action. Do strategy every week. He follows 10 indicators, joins 5 discords, and chases every move. His screen looks like a fireworks show. Every tick is a thrill. Trader B, he has 2 setups. Checks the market once, places one trade, logs it, and walks away. No adrenaline, no hype, just routine. Now guess who's compounding quietly month after month? It's not the one who feels alive on every trade. It's the one who learned the real game. Discipline is repetition, and repetition is boring. Here's the myth most traders believe. If I'm bored, I must be missing opportunities. But that mindset is a trap, because what they're really saying is, I'd rather feel excitement than grow equity. Millionaire traders, the ones who survive the test of time, think differently. They know trading is not about being right. It's about doing right again and again, no matter how it feels. And that's the catch, doing the right thing is often incredibly dull. Richard Dennis, the man behind the Turtle Traders experiment, said something brilliant. He took complete beginners, taught them a simple system, and told them, follow the rules exactly, no exceptions. The results? Some turned that system into millions. Others blew up. Why, same system, different levels of discipline. The ones who got bored and broke the rules lost. The ones who embraced the boredom won. That's not a trading lesson. That's a life lesson. But here's the challenge. Our brains crave novelty. They want variation, excitement, and dopamine. The markets? They don't care what your brain wants. They reward consistency. That's why pros don't need 15 strategies. They master 1 or 2 and run them like a machine. They measure. They journal. They refine. They don't jump setups. They sit in silence until the edge appears. It's the exact opposite of the get-rich-quick mindset. And it works. Think of it like a pilot. Would you feel safer in a plane where the pilot improvises mid-flight? Or with one who follows a strict, rehearsed checklist, no matter how many times they've flown? Exactly. Discipline builds trust. In flying and in trading. The difference is, in trading, you're both the pilot and the passenger. And if you keep chasing turbulence just to feel something, you're going to crash. Let me tell you about a trader I mentored. We'll call him Sam. When we first connected, Sam had every indicator imaginable on his screen. He traded 5 different pairs across multiple time frames. He was exhausted, burning out, barely profitable if at all. I gave him a challenge, cut it all. Pick one setup, one pair, one time frame. Trade it 50 times, no changes. At first he resisted. It's too simple. It's boring. I'll miss out. But eventually he committed. Trade after trade, he followed the rules. No excitement, no fireworks. But guess what? His equity curve started bending upward. And you know what he told me? This is the most boring and profitable I've ever been. That's the shift you need to make. Stop looking for dopamine. Start looking for data. Stop asking what's exciting today. Start asking what's repeatable today. Because every time you chase a thrill, you lose an edge. And every time you repeat discipline, you sharpen it. Here's your takeaway. If your trading feels exciting all the time, you're probably doing it wrong. The pros, they wake up, they follow the plan. They wait, it's not sexy, it's not viral, but it works. Because wealth is built in the repetition, not the rush. Now that you understand how boredom creates breakthroughs, it's time to dig into the next transformation. Let's talk about how millionaire traders think beyond just entries and exits, and see trading as a systemized business operation, not a guessing game. That's up next. The market drops 300 points in 5 minutes. Social media erupts. Traders start panicking. Some freeze. Some chase. Some blow their entire week in a single, emotionally charged decision. But one trader doesn't flinch. He's calm, focused, almost detached. He doesn't react, he executes. That trader is who you want to become, and the reason he survives while others drown. Emotional control. Let me make something clear. Professional traders don't have less emotion. They have more awareness of it and systems to control it, because the market is designed to trigger you. Red candles trigger fear. Green candles trigger greed. Volatility triggers FOMO. Losses trigger revenge. But here's the brutal truth. You don't trade the chart. You trade your own brain reacting to it. That's why the elite prepare before the chaos happens. Let's talk about a real example. In 1992, George Soros made over $1 billion betting against the British pound. But he didn't just wake up and fire off a trade. He built the thesis. He sized correctly. And when the moment came, when the pound snapped, he didn't panic. He pressed his advantage with composure. Meanwhile, millions of others, retail traders, bank desks, even central bankers panicked. They reacted. He executed. That's what emotional control looks like. It starts before the market opens. Top traders prepare mentally like athletes. They journal. They write their game plan. They visualize possible market conditions and decide, ahead of time, what they'll do in each scenario. They don't just prepare their charts. They prepare their mind. Think about a pilot. Turbulence hits. The cabin shakes. But the pilot isn't guessing what to do. They're trained, rehearsed, and methodical. That's what the best traders model. One elite trader I studied uses what he calls the pause rule. Before every trade, he pauses for 10 seconds, checks his breathing, asks, "Am I calm? Is this within the plan? Am I reacting or executing?" If the answer isn't clear, he steps away. That one habit has saved him hundreds of thousands over the years. Another top fund manager keeps a post-it on his screen. The market owes you nothing. It's a daily reminder not to chase, not to expect, and not to force outcomes. These tiny rituals build emotional muscle. Because here's the truth. Emotional reactions are expensive. They cost more than bad trades. They cost clarity. They cost momentum. They cost you your identity as a disciplined operator. And when left unchecked, they cost your account. So how do you start building control? Journal after every session. Write what you did and how you felt. Patterns will reveal themselves. Use checklists. Did you follow your plan? Was risk in place? Were you calm? If not, you don't trade. Have shutdown rituals. After big wins or losses, walk away. Let your nervous system reset. Talk to yourself intentionally. Use mantras like, "My job is to follow process," or "One trade doesn't define me." Sounds simple? It is. But it's hard to do consistently. And that's why most traders skip it. They look for better setups, not better self-control. But the traders who make it, the ones who last 5, 10, or 20 years, all say the same thing. Mindset is the edge. Everything else is noise. So next time the market spikes or crashes, ask yourself, am I reacting to chaos? Or am I calm inside the storm? That answer will determine your future in this game. Because pros don't just trade setups. They trade their psychology and they win. Most beginner traders look at their screen, and all they see are dollars. If I lose this trade, I'm down $50. If I win, that's $200. I could pay a bill with that. But that thinking is why they lose. Because the moment you assign real-world emotional weight to your trades, you stop making logical decisions. You start risking your rent money, your groceries, and your identity. And the market? It eats that emotion alive. Let me show you the difference. Imagine two traders. Both have $5,000 accounts. Trader A risks based on feeling. Some days he feels bold and risks 10%. Other days he's scared and pulls back. He adjusts based on mood, not math. Trader B, he risks 1% per trade, every time. It doesn't matter if he's on a winning streak or a drawdown. He treats risk like a poker chip, not his rent money. Now fast forward 6 months. One is broken, one is consistent. Guess who's who? This is the shift. Pros don't risk dollars. They risk units. What's a unit? It's a pre-decided chunk of your account, usually 1–2%, that you're mentally okay losing. It's not tied to fear. It's not tied to greed. It's part of the system. And when you think in units, not dollars, something magical happens. Your decisions become cleaner. You stop trading scared. You start managing risk like a business owner, not a gambler. Think of it like a soldier walking into battle. Does he bring everything he owns? No, he brings what the mission requires. Just enough to fight, not enough to ruin him if he loses. That's how pro traders think about capital. They never go all in. They never bet the farm, because they know this isn't about one trade. It's about 1,000 trades executed with discipline. Let's break it down with numbers. Say your account is $10,000. You risk 1%, that's $100 per trade. That means your stop loss is set so that if the price hits it, you lose $100, not more. You're not guessing. You're not reacting. You're controlling. That's the key word, control. Millionaire traders are masters of it. They don't control the market. They control their exposure to it. Remember Nick Leeson, the rogue trader who destroyed Barings Bank? He started with a small mistake. Instead of cutting it, he doubled down, then doubled again. Because he wasn't thinking in risk units. He was thinking in hope. Millions were lost. An institution collapsed. All because one man couldn't respect the math. That's not a historical anomaly. That's a cautionary tale. Now compare that with George Soros, the man who broke the Bank of England. Yes, his bet was big, but it was calculated. He knew exactly how much he was willing to lose. He sized up only when the odds were in his favor. And when the trade worked, he pressed the edge. He wasn't hoping. He was managing. There's a difference. One that separates survivors from casualties. But what if you're trading a $100 account? The same principle applies, even at a small scale. Risk management is a habit, not a luxury. Risk 1 per trade. Treat it like $1,000. Because how you treat $100 is exactly how you'll treat $100,000. Habits scale. So does recklessness. Here's a mindset shift you need to burn into your brain. The goal is not to make the most money per trade. The goal is to stay in the game long enough to let your edge work. And the only way you stay in the game, it is by managing risk like a machine. Let me leave you with a poker analogy. The best poker players don't bet the house. They bet chips. Each chip represents a calculated portion of their stack. They're not emotionally tied to one hand. They're thinking about the long run, the series. That's how pro traders think. Each trade is one chip in a bigger stack. Win or lose, you move to the next. Same setup, same size, same system. No drama, no panic. Just process. So here's your takeaway. Stop thinking in dollars. Start thinking in risk units. Decide your percentage. Stick to it. Execute it emotionlessly. Because true power in trading doesn't come from how much you win. It comes from how well you manage what you can lose. That's the edge most never build. And it's exactly what we'll explore deeper in the next chapter, where we talk about the final shift that ties this all together, the one that transforms a trader's identity forever. Let's go there. Most traders don't fail because they lack intelligence. They fail because they approach trading like a hustle, not a business. They wake up late. They skip prep. They chase green candles and call it intuition. Every day is a roll of the dice, hoping this time something big happens. That's the hustler mindset, and it's a trap. Let's paint a picture. Imagine two people. Trader A starts his day by scrolling Twitter, bouncing between Discord alerts and YouTube hype. He sees someone post a 600% return on a meme coin and jumps in. No plan, no sizing, no edge, just emotion. Trader B opens his journal, reviews yesterday's performance, runs through his checklist, sets alerts. He's not trying to make money today. He's trying to execute his process. Trader A is chasing outcomes. Trader B is managing a business. And that's the shift. See, when you're a hustler, you're always thinking short term. You're trying to catch a move. You want that dopamine hit, that fast P&L spike, that one home run trade that proves you're finally getting this. But when you think like an operator, you start thinking in systems at risk, in data, in sustainability. An operator knows one good trade means nothing if the process is broken. Let's take an example from outside trading. Jeff Bezos didn't build Amazon by hustling deals. He built systems. He focused on long-term customer obsession, logistical precision, and scalable operations. That's how empires are built, not by chasing quick wins, but by building repeatable edges. Now ask yourself, is your trading built for scale or survival? Because if your answer is survival, you're one red day away from blowing up. This shift, from hustler to operator, is what turns small traders into professionals. Let's look at how this plays out in your daily trading. A hustler risks too much on one trade, changes strategies mid-week, lets let emotions dictate actions, has no journal, no edge, no rules, lives and dies by the P&L each day. An operator accepts small losses as part of the game, executes the same edge with boring consistency, tracks data and reviews performance, sizes based on account risk, not gut feel, builds routines around discipline, not hype. It's the difference between building a trading machine or being a slave to the market. And yes, this mindset shift feels uncomfortable at first, because it's not sexy. No one wants to hear, get consistent with 1-hour trades and compound. Everyone wants 1,000% gains in Lambos. But look at the traders who've lasted 10+ years. They're not hustlers, they're operators. They've detached from needing to feel right. Instead, they run the system. They think in risk units. They think in win rate over series. They think in quarters and years, not in minutes and days. That's what gives them peace. That's what gives them longevity. Here's the practical step. Start treating your trading like a business with rules, routines, reviews, and risk limits. Ask yourself, what's my trading edge? How do I know if it's working? How much am I risking per trade, per week, and per month? How often do I review performance and adapt based on data? If you can't answer those questions, you're still a hustler. And that's okay, as long as you don't stay there. Because the transition from hustler to operator isn't instant. It's a daily grind. It's building boring habits that protect your capital. It's saying no to random trades that look good. It's accepting that sometimes the best trade is no trade. But the reward? It is stability, confidence, and eventually, real scalable growth. Not just in your account, but in your identity. Because once you start thinking like an operator, you stop chasing. You start building. And that's how the game is really won. Everyone's looking for the secret. Some think it's the perfect indicator. Others swear it's hidden in price action, supply and demand zones, or order flow. But the truth? The real edge isn't found on a chart. It's not in the system you run. It's in the person who runs it. Let me say that again. Identity beats strategy. Every time. Take 2 traders, both with the same setup, same risk rules, same broker, same market. Trader A blows the account in 2 months. Trader B turns it into 6 figures over 3 years. What changed? Not the system. Not the market. The operator. You see, strategy is surface. Identity is a foundation. And if your foundation is weak, no strategy will save you. You'll revenge trade. You'll break rules. You'll chase after every green candle like it's a lottery ticket. Not because you're dumb, but because your identity is still wired like a gambler. Let's go deeper. There are 3 identities most beginners carry. The hustler wants fast money, quick results, and doesn't care about risk. The analyst overthinks, overstudies, but never pulls the trigger. The hopeful prays the next trade will be the one. Each of these identities will sabotage your account in a different way. And none of them survive the markets. But millionaire traders, they carry a different identity. They are operators, not operators don't hope. They execute. They don't chase, they wait. They see trading not as a lottery, but as a craft. They don't attach their self-worth to a single trade. They attach it to the discipline of doing the right thing over and over again. Let me give you a real-world example. Jesse Livermore, one of the most legendary traders in history. The man made and lost millions. But it wasn't his strategy that failed him. It was his identity. At his peak, Livermore had mastered the art of timing. But beneath that skill was a man battling demons, ego, pride, and impulsiveness. He knew what to do, but when pressure hit, he couldn't stop breaking his own rules. That's the danger of having a powerful system. Without the identity to manage it, on the flip side, take Richard Dennis and the Turtle Traders. He took complete beginners, people with no trading background, taught them a simple rules-based system, and many of them went on to become millionaires. Why? Because Dennis focused on more than just strategy. He instilled belief, discipline, and identity. He built traders from the inside out. That's the core of this final lesson. The market doesn't just test your strategy. It tests your self-image. Are you the kind of person who cuts losses without hesitation? Waits patiently when nothing's there? Follows the plan when emotions scream to deviate? Or are you still the trader who feels the need to be right? Doubles down to get it back? Defines success by the last trade? The market doesn't care about what you say. It only reflects who you are. Think of it like a fighter pilot. The cockpit doesn't win the war. The machine is only as good as the person flying it. You can give a beginner the most advanced jet in the world, but without training, mindset, and identity, they'll crash it before they get off the runway. Your strategy is the plan. You are the pilot. So here's your challenge. Stop asking, what system should I use? Start asking, who do I need to become? To run any system with power? Because once your identity becomes that of a professional, you won't chase. You won't fear. You won't hope. You'll show up, do the work, manage the risk, and let the edge play out. Like a sniper, like a soldier, like a business operator. Confidence doesn't come from a green candle. It comes from knowing who you are. And when you become the trader who can manage a system, instead of search for one, that's when everything changes. You stop trying to win every day, and you start playing the long game. That's the real secret. That's the millionaire mindset. Because in the end, systems will evolve, markets will change, but the edge that never expires is the one inside you. And that edge starts with identity.